welcome. You're here with us on India Revival Mission on Times Network. I'm Heena Gambhir. There has been a significant fallout of the coronavirus pandemic in terms of how people spend their money. The financial behavior of the people of this country has gone through a sea change. As a result, we have seen a lot of changes in technology in the financial sector in the country. And that's why we are going to discuss digitization of financial services in India because of coronavirus pandemic and what is it that we can now expect from here on. Joining us on the broadcast is Dhananjaya Tambe, who is CIO and DMD, State Bank of India, the largest public sector bank in the country. We have Vinay Mathews, founder and COO of Faircent, Seema Prem, co-founder and CEO of FIA Global. We also have with us Adhil Shetty, who is founder and CEO of Bank Bazar. Let me begin this discussion with you, Mr. Dhananjay. How have you seen this change coming into the financial sector specifically because of coronavirus?
So, Heena, you have asked a question which has got many dimensions to it, and it will take a long time to answer it. But if your question is specific to payments, because you started with payments,
yes,
then the impact of it is like this, we can divide it into two parts. What happened immediately after the pandemic was declared and the country decided to go into a complete lockdown? The immediate fallout was that electronic payments actually declined because shops shut down, malls shut down, so you could not use your debit card or a credit card. ATMs were running, but people could not access ATMs. And you could have paid on the internet, that is online payments could have been made. But then the question was, what would you pay for online? Because the home delivery services were all impacted. So in the month of April, there was a sharp decline in digital payments in all the channels except for a few channels, such as the Aadhaar-enabled payment system. Many people do not know about this. It is a payment system where using your Aadhaar number, you can actually draw money from your account. And it is used by a number of people in the rural and the semi-urban areas. And the other is the Aadhaar merchant payment system, where using your biometric, you can make a payment to a merchant. Again, it is used mostly in the rural and semi-urban areas. In the urban centers, you might not find this mode of payment. Those are the only two channels which actually found a massive uptake. In fact, both of them, the increase in the transaction was 4 to 5 times. Especially, all these migrant workers who did not have any ATM card with them. This came in very handy for them, and they were able to withdraw cash from what are known as the customer service points or bank mitras. From there, they were able to withdraw money using AEPS. Those two channels saw an uptick. But if you see the trend now, the Aadhaar-enabled payment systems have again started showing a little bit of a decline. And the rest of the channels, that is the online payment channel and the POS channel, those channels have again started to increase, especially on the online channel side. Now, in online channel, again, you have got two major channels. One is the card not present channel, which has again started showing a very healthy growth. More than that, the UPI channel has seen a phenomenal growth. And I think that is where the future would perhaps lie because of the convenience factor that UPI brings. So payments are coming back to normal. I wouldn't say they have come back exactly to normal, but yes, they are coming back to normal.
Okay, so you've told us how the trend really has been as far as these online banking is concerned. Let me also now go across to Seema Prem from FIA Global. Seema, now, tell us a little bit about your company. How is that working with the banking sector in the country?
Yeah. So SIA is an impact fintech that's redefining the way financial services are distributed to the last mile. So we have largely been working on the Pradhan Mantri Jan Dhan Yojana. We serve about 90% of the districts in all states and union territories in the country, serving around 34 million customers in India and Nepal. So I think what the pandemic kind of gave us an opportunity was to ensure that leveraging our distribution network, we provided uninterrupted banking services to customers, specifically in rural India. So I think one of the things that pandemic has done is it has reinforced the robustness of the digital banking infrastructure, which has been set up by the Indian government and the financial services sector, with SBI, State Bank of India, actually leading the way, right? So if you look at this COVID-19 relief program, it is one of the best examples of how digitization has been successful. It is one of the largest, the widest, and the longest relief programs of the Indian government in the last 100 years. And it is also the quickest. So, unlike the other countries like, say, Colombia, Kenya, or even Thailand, where you have G2P payment networks, India has managed to actually successfully implement it at scale. And they've done it by two delivery mechanisms. One is using the banking network to, ensure direct cash transfers into customers' accounts. And second is use the physical distribution network of 600,000 bank mitras across the country to ensure that there was uninterrupted supply of money, right, to people, especially people who needed it the most, right? When you look at rural India, it's largely a cash-based economy, and cash support happens to be a lifeline. And we had to ensure that it was provided uninterrupted. And I think that is what we did very effectively through a combination of coordination with the government, with the banking sector, and fintechs like SIA to ensure that the supply continued uninterrupted.
So how is this? Yes.
Yeah.
Please complete. Yes.
So I think it is one of the best examples, right, where we have left even the developed nations far behind of large-scale distribution of a social intervention, in the form of cash subsidies on a real-time basis, right? Now, we leverage the bank's technology, right, where in order to do the transfer, but over the layer of the bank's technology, we have developed our own AI-based fintech platform, which ensures, which aggregates, designs, and delivers these products at scale to the last mile.
Okay. Mr. Dhananjay, before we go across to Mr. Adhil Shetty, I want your quick response as well on what Ms. Seema has told us. How is this integration really happening?
Okay, so see, we reach out to the customers in multiple ways. See, today, more than 93 or 94% of our transactions happen through what are called the alternate channels. Alternate channels means things like ATM, internet banking, mobile banking, and other such customer-facing interfaces. So people really do not have to come to the branch for getting services. But nonetheless, we have a network of 23,000 plus branches. In addition to this, we also have a network of more than 61,000 customer service points, which are spread mostly in the rural and semi-urban areas, through which we serve a very large section of the society. All or most of the Jan Dhan accounts that have been opened through these customer service points. So therefore, we already have a channel through which we can serve these people. Now, as far as the subsidies are concerned, the direct benefit transfers that the government has, so those are routed through us as one of the primary banks, although it's also routed through other banks. And we had a very good number of such beneficiaries are with State Bank of India. And when they get the credit into their accounts, we do provide them with multiple ways in which they can withdraw or make use of this money, right? Because ultimately money has to be put to some use. So what we have seen is that most of them prefer to use the customer service point, the CSP channel or the banking correspondent channel as it is also called for withdrawal. Although now what we have also observed is a good number of people using the ATM channel to withdraw the cash.
Okay.
As you are aware that most of these people are in the semi-urban and rural areas where cash is still the predominant way of making payments. So therefore, finally, they will need cash for making payments.
Okay, so that's how you're using it. Mr. Adhil Shetty, you have created a marketplace wherein people can shop for loans also online. Was that an outcome of government's push for Digital India?
Yeah, I think the government Digital India has a lot to do with it. I think we've seen both digitization of entire loan processes and artificial intelligence make a big difference in COVID. I'll just give you some simple examples illustrating this. Take digitization. In the past, to do a KYC, I had to come to your house, collect your PAN card, collect your Aadhaar card, ship it somewhere. They had to verify it. It took days to do it. Today, right, on Bank Bazar with digital KYC, which the RBI has approved, the entire process is a few minutes. You don't have to leave your house. In COVID, you don't have to meet anyone. You don't have to hand over any paper. The second is artificial intelligence. I think that with what SBI is doing, and Mr. Tambe had spoken earlier, they have a pre-approved personal loan product where 21,000 crores has been dispersed in the last year. All of this is happening, using data without having to meet every customer, pick up many, many documents, and it's the future. So it's made the process extremely simple. I think together what the government's push for AI and digitization have done is a 10-day process, right? Literally has become a 10-second loan approval and dispersal process. I think it's the future, and it is what will democratize access to credit in India.
Okay, so a 10-day process has become actually a 10-second process. Mr. Mathews, tell us the kind of change that you have seen and the kind of changes that you had to make to adjust to this new era that we are all into, digitization, how it has been accelerated, especially in the financial services sector.
Okay, clearly, I think, in the last 6 months, or, they're about 5 to 6 months, twice as many consumers have come online, okay, which is a huge surge. It could be groceries, e-commerce, electronics, whatever, education, a whole lot of them came for education. Okay, there's a huge surge of, people coming online, okay. Now, a part of these people will definitely go about taking finance, okay. So companies have to build very smooth processes, digital processes, contactless processes to make sure the customer journey is perfect. And it needs to be cost-effective and very, very transparent. It has to be paperless, presentless, and cashless. Okay, so that's the journey that all of us are talking about. So, with respect to us, I was talking about the data collection part. Okay, data collection will happen from a wide range of sources, not just about the customer, but also from outside sources to understand the customer even better. And also on the other side, lenders would be able to get a better transparency in terms of what is the kind of customer which is coming. The other thing is that we are seeing a lot of uptake in terms of the artificial intelligence companies who are in the business of artificial intelligence, machine learning, IoTs and all. There will be a huge surge of such companies, as we go along. In the next few years, at least a couple of years, we'll see a blur between, huge, expensive shopping and basic shopping. Okay. So the premium shopping and will kind of slow down a lot, and the value shopping will emerge. So basically, it means that lending also will happen accordingly. It will not be people are not going to buy fancy stuff in the next couple of years at least. So I think that's a huge change you have to kind of bring about within the journey that you are taking. Okay? Also, we are seeing incumbents and the large financial institutions. There will be a huge battle to win online customers. Okay, so there will be a lot of shift which you'll see in the incumbents in the next few years to get hold of the customers who otherwise they were feeling we're not adding value to them. So I think they will go out and try and get those customers in. Okay, and definitely the logistic, the e-verification part, all of that will see a sea change. As an organization, we have done all of that. This completely contactless journey that we have today. Collection will see a huge, signs, come around. So it will be more digitized. It will be more, trying to understand the customer's behavior basis which the collection will happen. So it will be mostly done preemptive rather than reactive. Okay, so you will be working with bureau a lot to get the behavior of the customer, whether he's paying other lenders or not, whether his credit cards expenditures come down or not. So many things that you can pick up from the bureau, which will make your collection journey a little more easier and better. So at the end of the day, I think what I feel is that people or millennials who are taking these lending decisions today or borrowing decisions are beginning to trust people more than large institutions. Okay? And that's because there is a lot of transparency which is getting built. So if you see any of these platforms like Amazon or Flipkart or Uber or Swiggy or Zomato, any of these platforms, you see a lot of transparency which is there both sides. Okay? And that is very, very important for the ecosystem to grow. So that's what I feel.
But for all of you, this question is, we also know that financial sector is actually a gold mine of the data of the people of this country. Now, you all are handling the data of many kinds of so many people. So the question of privacy is also attached to this. Let me begin with Mr. Dhananjaya here. How robust is the security mechanism and how are you constantly upgrading it? Because as everything is going online, the question of data of the customers, getting out is also a big cause of concern. So many cyber frauds are also happening. In COVID time, the number is expected to be even higher. So how is the bank really dealing with this aspect?
So for any banking company, cyber security is the number one consideration today. And regardless of its size and regardless of its geographical location, because as you have very rightly pointed out, we handle a huge amount of PII or personally identifiable information data. And that data is especially very, very precious because it is a financial data. So naturally, it has to be kept very, very securely. As all banks have, we too have multi-layered security starting from the perimeter, which typically means that you're even before you connect to the internet, your ISP or the internet service provider, he provides a layer of security. And from that point onwards, you have all the layers of security that you will have typically with there being a DMZ in between and then your applications actually running in the militarized zone. Plus, you will have all the conventional methods like WAF, web application firewall, IDS, IPS, antivirus, anti-malware, all of these solutions will be running into your system. In addition to this, you will also have what is called a Securities Operations Center, SOC, which will keep an oversight on all the activities which are happening in your data center. Then you would also want to do something called data encryption. So two types of encryption. One is called data at rest and the other is called data in motion. So both of these you will try to encrypt so that even if there is a data leakage, the person who gets hold of this data, he will not be able to make sense of it. So all banks adopt multi-layered security so that even if one of the layer, God forbid, is breached, still the adversary will not be able to reach your database layer.
And Mr. Dhananjaya, now SBI we know is the largest public sector bank in the country. So people have faith in an institution like the State Bank of India. How about private companies? Mr. Adhil, Shetty, for a company like Bank Bazar, you're also saving a lot of data of the people of this country, financial data. So how do you build that trust? What are your systems?
Right. So, the Bank Bazar CTO, Dr. Murari Sridharan, always says that information security is a work in progress. So like Mr. Tambe said, you've got to constantly be on guard, be vigilant, and keep improving. So at Bank Bazar, we see it as a 3-level process. So the first starts with having the gold quality certifications that are available. So, the ISO 27001 ISMS and the PCI DSS. So it starts with having the top level of certification possible and maintaining that certification over multiple years. The second is a dedicated information security practice. I think what SBI calls the SOC, we call our dedicated InfoSec practice, which is constantly watching to see how we need to stay ahead of the curve. And the third is working with really high quality partners on things like information security. So not compromising when you choose a partner. For example, to lock down our systems. And also working with top quality vulnerability assessment, penetration testing partners.
Okay.
Work with CISA, who are constantly watching and advising on how you stay ahead of the curve. So broadly, get the top certifications, have a dedicated practice within the company, work with external partners who are top of the line, and it's a work in progress. You can never rest on this matter.
Okay, it has to be constantly upgraded, the technology to provide security. What about you, Ms. Seema? How is the system like in FIA Global?
The multi-layer security architecture which Mr. Dhananjaya was alluding to, yes, that is there in place. But what we also realized was that we needed to kind of innovate. About 18 months of risk innovation happened in 3 months.
Yes.
Right? So we handle about 50 banks, and reconciliation of those banks on a daily basis was possible through artificial intelligence and machine learning. However, suddenly we had to make the reconciliation actually on a real-time basis.
Okay.
Right?
Okay. I give you the last word, Mr. Mathews. Yes.
Okay, so see, we are a RBI regulated entity, okay? So the banks, the NBFCs, the large NBFCs, whatever is the standard for security within their scheme of things, that is exactly what we have to adhere to, okay? So that kind of security is what Mr. Tambe was talking about. We are also have to, by regulation, by RBI's regulation, we are supposed to adhere to that. That is one. Okay. Second is that there is a system which the government has made, which is the architecture, the 3-layer architecture that we have, the presence-less, paperless, and the cashless layer that we have with an open architecture, with a consent-based architecture. This is a beautiful system. A whole lot of data moves through this architecture, and it is a very secure and a very nice ecosystem that the government has built. You just need to write and make sure that all data is collected through that, and are served in a secured server. So we are based out of Amazon Cloud. So the servers are based, and it is located here in India itself. And on top of that, our business is about we are a layer on top of a banking technology. Okay, so it's if the banking technology wouldn't have existed, I think we wouldn't have been there. It's like Uber wouldn't have existed if Google Maps wouldn't have been there.
Yes.
Right? So Uber is a layer on top of the Google technology or map technology. Similarly, we are a layer on top of banking technology. So the security, from a security point of view, I think we're very much protected with the regulation, with the banking systems that we have, the government stack and APIs, builds that there, and third party, Amazon and other partners that we have, to make sure that this data is secure.
All right. Thank you very much, all of you, for joining us here on the special broadcast, and really appreciate your inputs on this very, very important aspect, digitization of the financial services. Thank you very much.